There's a lot of people that talk about, well, gosh, what precious metal do I get into? Do I do physical? Do I go buy an ETF? Do I do digital? And, the way I always tell people is it really depends on you. Depends on what your priorities are and what you're trying to accomplish.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics as we continue on in 2020, an exciting year, some volatility in the gold and silver space. And today, fortunate to be joined by Ken Lewis, the CEO of APMEX and OneGold. Real quick, before we dig in, go ahead and hit that subscribe button so that as the Federal Reserve and our government does the best to do what they do, you can stay posted with some of the folks that are creating solutions to these things, which I always appreciate and admire, and Ken's going to get into, because yes, there are the things going on in the world, but when you're actually out there looking, there are people that are finding answers to these challenges, of which Ken is one. So with that said, Ken, appreciate you making some time to join me today, and how's everything going with you?
It's going great. I appreciate the time and look forward to kind of diving in on the markets and kind of what we're doing over here to try to help consumers get into gold and silver.
Yeah, well, how about just to get started, you could give folks an idea of the businesses you're running, maybe a little quick bit about your background, just so they know where you're coming from and some of your experience.
Yeah, I've been in the industry about 9 years. Came out of traditional Fortune 500 companies. Been CEO of APMEX for about 4 years. APMEX, for those who aren't aware, we do about $900 million to $1 billion a year in volume, done about $11 billion in our lifetime in volume, got about 1.5 million customers. And what we really call ourselves is we're the Amazon of precious metals. So you want to look for a SKU, we're likely to have it. We ship it to your door, same day, next day. Take credit card, take check, take bank wire, you name it, the payment methods are all there. Very straightforward process. We've got about 20,000 products on our website. And really focus on the web. We also take care of people on the phone when needed. Really known for customer service, high integrity. Been around right at 20 years now. This is our 20-year anniversary coming up here soon. So APMEX has been around a long time. I think we're the number one seller of precious metals in North America. OneGold is a new venture we've done with Sprott. Some may be aware of Sprott, an alternative investment house. Does a lot of ETFs out of Canada. Publicly traded. I think they got about $10-11 billion under management right now. The two of us came together to build a new concept called OneGold, which is really our effort into the digital space. It's not a crypto. I'll be very, very clear. It's not a crypto, but it is an attempt to try to bring kind of the crypto experience, if you will, to consumers. Very easy front-end user experience. You can own gold in a matter of 15 seconds. And you're going to get silver at $5 over spot. So it's a concept we've been working on and we're very proud of. And again, we'll talk more in detail about that here, I'm sure.
Well, I appreciate that, Ken, because I find it's interesting. You could talk about ETFs or all sorts of wild levered inverse funds. Mm-hmm. Yet one of the things I noticed and still hear from people, even when I got back into gold and silver over a decade ago, sometimes people start to get the argument, the thesis for why gold and silver, yet when it actually comes to going out and buying it, it's like you see the head steaming. Yeah. And perhaps you could just explain and maybe remove some of the mystery for that.
Yeah, look, I mean, first and foremost, is gold a viable investment, right? I tell people to do your research. The data doesn't lie. I mean, since the year 2000, it's the second best performing asset class behind real estate. It's done very well for many people out there. It's had a tough run for since about 2012 to 2018. It was a little bit tougher run, but it's come back strong. Now trading at numbers that are very not quite, but 90% of their high. So it's done very well. But if you look at the numbers, it does well. It also performs inversely to the market. And so if anyone's out there thinking the equities markets are overvalued or feel like at some point they're going to be a pullback, normally what happens when that happens is that the gold and silver prices go up. So it's a great opportunity to hedge your bet. I tell everybody, having a percentage of your investment in gold from a diversification strategy is a no-brainer. And the data doesn't lie. Put your portfolio's tools in, put in the different scenarios, and you're going to find you're probably better off to have it in your portfolio than not. There's a lot of people that talk about, well, gosh, what precious metal do I get into? Do I do physical? Do I go buy an ETF? Do I do digital? And, the way I always tell people is it really depends on you. Depends on what your priorities are and what you're trying to accomplish. I'm obviously the largest seller of precious metals physical. And for that buyer, honestly, they want it in their house. They want to have their fingers on it. They want it off the grid. They want to know it's going to be there on a rainy day. And that's white collar investors and blue collar. That's really a very large spectrum of individuals. Love the idea of having an asset offline. They love that they can self-report their taxes on their gains or losses. And really no one knows the assets there, and they can pass it on to their families over time. And it's just a strategy people have been deploying for hundreds of years, frankly. And then there's the digital and the ETF side that it clearly just depends on how comfortable you are. I'm not a fan of ETFs, but I think depending on the ETF, there's some viable options out there. Our partners at Sprott have some great products that are very reasonably priced, and they know the metal's there. Unlike some of these ETFs, you don't know if the physical asset's really there or not. But you can't do redemption easy. It's expensive on a per year basis for these ETFs. You have to go through your brokerage account, so you can't self-manage your own experience. So there's challenges there. And we'll dive more into digital here, but I think digital's right in the middle. So I'll sell you physical, I'll sell you digital. And if you want an ETF, just do your research and make sure it's right for you.
Yeah, a lot of good points you mentioned in there, Ken. In particular, that gold actually is outperforming even our bubblicious stock market since 2000. Go back to when Nixon removed us from the gold standard. The numbers get even bigger.
Yeah.
And I would say that the two primary groups that I run into anyways are that certainly there's the folks that see the money printing, see government debt loads and everything, and want to just have physical as a hedge against currency and inflation. And then there are some which I find where you get into that often look to GLD and SLV that are looking at more of a short-term trading standpoint, which on one hand, those can be good because, if you're selling physical back and forth on a weekly basis, not as ideal with the fee structure.
Yeah,
Maybe you could talk about those two groups and what
Mhm.
you would recommend for folks for either case.
Yeah, look, I think long-term people tend to take a long-term view of precious metals. It generally is not a short-term trading thing for a number of reasons. Hard to predict the markets. Gold and silver, what drives the price of gold and silver is a little different than other products, right? We have a world event. Let's take the Iran-Iraq situation we had back in early January. It impacts precious metals. Why? Because people see precious metals as a safe haven investment. They see it as something that's going to be there when other things are not. They feel very comfortable in that space. They know the historical performance of it. And so people go into a safe haven just when there's world events that kind of become concerning. But other things that drive the price are low interest rates or, the printing of the dollar and the debt we're building and the stability of economies. So the GDP growth and other things can generally be very good for precious metals. And I think that's something people need to do their research on. The equities markets, and booming as they are, gold and silver still had a great year last year, even though the equities markets did just as well, even better. So I think it's a case where, you look at World Bank demand, you look at the amount of volume coming out of the ground. There's studies out there showing that there's not as much gold being mined as there used to be. That scarcity is going to drive the price up as well. So, there's a lot of indicators where people would say gold has a good future in it. But I also look at it and say, well, let's say it doesn't have a great future. What's its downside? 10%? 15 max? So the downside in gold is really not that significant. So when you think about investment, buy a Tesla stock right now for $400 or $500 a share. What's the downside of a Tesla
Ken,
stock?
that's going to cost you almost $600 today.
Yeah. So what's the downside on a Tesla stock, right? Clearly more than 10 or 15%, but maybe the upside's a little higher. Gold investors tend to be okay with maybe not as big upside, and some will be offended by me saying that it doesn't normally grow 30, 40% a year like you might see a stock do, but it's also not going to drop. So that's to answer that question. I think it's a viable option for anyone, short-term or long-term, but gold buyers tend to be long-term. Guaranteed, they like to hold on to it, keep it for a rainy day. I think that's a viable way of looking at things. And me personally, I keep about 5 to 10%. I'm in the metal industry, so I don't need to carry a lot of gold and silver because trust me, my comp's going to go up and down with whatever the popularity of metals are doing. But I still put 5 to 10%. And frankly, I'm a bigger believer in silver right now. I'd look at silver and I think it has far more upside than gold, but I could be wrong. But I look at where silver is versus all-time highs and you go, 35% of its all-time high. Gold silver ratio is trading at crazy highs right now. I think silver is a great buy, even for a short-term investor, depending on your situation.
Yeah, and I know you also are partnering on some products where it gets into, you talked a little bit about it, but perhaps if you could go into detail of how the mechanics of some of those work. So, especially, for people who are new to just physical, certainly probably new to those as well.
Look, physical is, it can be complicated. I always tell a story of a buddy of mine, Mensa guy, very high IQ. He may have actually listened to this, who knows, right? He came to me and says, Ken, I'm confused. I've been on your website. There's a lot of product there. How do I decide what product to buy? And I got to start talking to him through spreads and premium over spot and what spot is and what drives spot price. And then think about the sellback process and what you're going to get back when you go to sell it. And just walking him through the dynamics. He got there. I think he ultimately bought Maple Leafs at the time. And he was good, but it was not easy for him to understand. As much as we try to educate consumers, it wasn't straightforward. But that's the way to think about physical. Physical is generally you get a COMEX spot, you prepare a spot to the consumer on your website, you charge a premium because there's fabrication costs to build that product. Consumers should think generally about when I go to sell it, what's it selling for, because that spread is what you're going to give up on your gain. You want to make sure you're dealing with viable partners who are, it's real gold, it's real silver. If you see gold for $500 an ounce on eBay, it's not real gold, right? I mean, common sense. So you need to make sure you can trust the seller. They have a reputation and history, and they've done really well by the customer in the past. So that's really the physical side. And people always ask me, well, which physical should I buy? Should I buy bars? Should I buy coins? Should I buy this? Should I buy that? Look, at the end of the day, the spread should be what you focus on. And I have found sovereign coins do the best. You go out and buy a bar, you go out and buy, oh, it's a great deal. I bought a gold bar for, I'm making a number up, $25 over spot. But when you go to sell it, you might get $30 back a spot. So now you got a $55 spread you're going to take a haircut on when you go to sell it. Okay, but if you go buy a sovereign coin, it might be $50 over spot, but you might get $10 over when you go to sell it. So now you got a $40 spread. So physical, think about the spread is what I would tell people when they're making their buying decisions. Sovereign coins tend to do better over the long term than bars, but bars are cheaper to get into. And one could argue I'll get more ounces for my dollars. I'm playing the spot price game anyway, and I can see that argument as well. Yeah, go ahead.
I guess this is perhaps a little bit more advanced beyond the basic 101, but for folks who do hear about the numismatics or collectibles, is obviously a very different product. And, for people who are just seeing the Fed go nuts, maybe not the first place to start, but since we do have a lot of sharp folks out there in our audience, I've heard the premiums on numismatics in recent years have been quite on the lower side. Curious if that's still the case and how you see that playing out.
Yeah, look, I think the collectibles market's actually been pretty good the last 2-3 years. APMEX has actually expanded into that. When you have 20,000 products in your website, you're going to have a lot of collectible type products there to offer. It's complicated. If you do your homework, though, you can make money in collectibles, but you need to do your homework and know what you're buying. You also need to be very careful when you buy collectibles on who you buy from, because there's a lot of guys that can sell you all day long with words. Do your research on the internet. Make sure you're getting a good deal. Grading services give you auction data for free. Look at the auction data. Make sure you're getting a good price. We actually on our website give you access to all that information on one click when we sell you a collectible coin. But getting back to it, premiums are low for pre-33 gold, but they've been recovering here in the last few months. I think pre-33 gold is an amazing investment. You can get into pre-33 gold at pretty much bullion pricing right now when you look at the premiums. And if it gets anywhere near this historical, you can make $60, $70, $80 on the premium. Forget about whether gold goes up. And that's why people buy numismatics. They expect the coin, due to scarcity and collectability, it's going to rise in value independent of what spot price is doing. And look, 20% of my business is collectible business. So We're seeing more and more people migrate to that. And look, it's cool to have a cool collection and say you got a coin that only 3 of them exist in the world in that grade or that quality that you have. So, so the collectible space is not as strong as it was, say, 6-7 years ago, but it's doing pretty well. And I think it has great upside potential in the future as well.
Yeah, I appreciate you pointing that out. Word of advice, and Ken, you can confirm if you'd agree with this or not. Don't just buy the coin book, see, oh, they have it, it's worth this much, and go out and mortgage the farm. You know, like you said,
right.
Like most things in life, if you go and you learn a lot about it, you can do well, but a different set of risks. Perhaps last one for you. Curious what the order flow has been like. Don't have to give us any specific numbers, but just after seeing the prices on the lower side for a couple of years, say for a rally in 2016, and then seeing that change a little bit last year. Are people buying more physical? What's that look like?
It's picked up a little bit. You know, 2000, I'm trying to get my dates right, 16, 15, you know, our company was probably 25% more revenue than we are today. The popularity of precious metals has dropped due to the equities markets booming. We have seen greater demand at different times. Obviously, early January was a good time for us. Last year, first 3 quarters were great. Fourth quarter, not as good. But I would say 19 was better than 18. 18 was better than 17. But we're not near to the level that we were at in 16. 2011 and 2016 were just booming years for precious metals from a demand standpoint, because people were buying on the downward turn of the price. So, you know, we're going to need some events. We like to say, I think, you know, Trump in the presidency has probably not been great for precious metals. Although I tell the story, when we actually rented space up in New York City, we paid our deposit in gold to Trump. And he made an event of that actually when he was looking at running for president. So he's a believer in precious metals himself. So, and he actually bought that when we let our lease go. He actually bought the bars from us rather than having them returned for our deposit, which is a great story for people to hear. But the net of it is demand is not where it was. It's healthy. The collectibles market for us is actually doing very well. It's helping drive the bottom line of our company. You know, one thing I'm very proud of at APMEX is we've never lost money in 20 years. Beautiful balance sheet. Really have done a great job there. And collectibles has really helped our bottom line the last 2 to 3 years.
Yeah, and Ken, interesting you mentioned about Trump. My old trading days, we had our office in, I believe it was 40 Wall Street, which is a Trump building.
I was actually
I've heard that you could have paid your rent in gold. I'm not sure. Is that accurate or?
Yeah, so I was actually in the same building. We were 50th floor and 40 Wall. And
oh, wow.
Yeah, and I think we had a couple $100,000 deposit we had to put down. We did it in kilo gold bars. And so when we went to get our deposit, we sublet it back out and got out of that after about 3-4 years. Yeah, when we got out though, Trump said, I'd rather buy the bars than give them back to you. I'm like, no problem, we'll make you a deal. And yeah, I think he's a believer in metal, and it's sad for us from a demand standpoint because, you know, he has done a great job with the economy. You know, GDP is growing, unemployment is low, interest rates are low. He's done a fantastic job with it. You know, the question is, you know, how much debt can we generate to keep that going? And at some point, you know, the multi-trillion-dollar debt of this country is going to catch up with it. Is it going to be next year, this year, 3 years down the road? I have no idea. But you can't keep printing money like you are. And Trump's very good at that and very good at building policies to help grow this country, which I mean, we all should be proud of. But there's a point where it's going to come to a head. And, you know, you look at the multiples our S&P is trading at right now. I mean, when we say all-time highs, it's not even close to what previous all-time highs were. It's very high up there. And at some point, again, like I say, whether Trump changes and the presidency goes Democrat, which would be great for the precious metals industry, or simply our country starts to have some resistance in its growth and in its debt and things like that, then I think you'll see precious metals do very well and return to what it was like back in 16, from 11 to 16.
Yeah, it's interesting you mentioned that because Democrats or Republicans, we see Fed balance sheet grow, we see the debt grow. I don't know if they've officially just given up on the debt ceiling limit. I mean, you may as well, because every time you hit it, you just raise it, which perhaps we dig into another day. Although, Ken, appreciate everything you've shared. If you have any final thoughts on how people can reach you and stay posted.
Yeah, I think the one thing I'd hoping to accomplish today is if you can just give me 2 minutes, I'll talk about
Sure,
it.
sure.
Our One Gold platform, I'd love for people to try it out. If you're a believer in ETFs, then you're going to love the One Gold product. If you're a physical buyer, you're probably going to stay physical. I'm not going to convince you to try a digital product. But let me just give you a quick overview. You're going to buy metal at 5 cents over spot for silver. It's going to be stored in vaults that you recognize, Brinks, Loomis, or even at the Royal Canadian Mint. Your own title. You don't have a middle guy. The title is yours. It's your metal at all times. We provide audits for that. We actually provide insurance, so you know the metal's there, and you got Sprott and APMEX behind it, so you know you're protected. And then you want to do things like I want to buy $5 a week. I want to buy $3 of gold. I want to buy 25 a month. You can do that in a matter of a couple of clicks on the One Gold platform. Dollar cost averaging, 65% of our transactions are people going out and doing transactions on a periodic basis. And they set it up a couple clicks and they're done.
Yep.
You link your bank account so you can move money seamlessly between One Gold and your bank account. People love that. So when they set up a continuity program where they want to buy weekly, all they do, they put in their either they do micro deposits or they link their bank account through the tool, and all of a sudden it just pulls the $50 out of the bank account every 2 weeks, and now you own gold. It's beautiful. And then the final thing about the product is redemption. So a lot of our customers love the idea of being able to trade in their digital and get physical bars shipped to them. We don't only make it easy for you, we put it right there on the site. You do it in a matter of a couple of clicks. You don't have to make 5 phone calls and beg for your money like you do with some of my competitors. It's all right on the site. And finally, we launched an app 3 weeks ago. We've got over 5,000 downloads in less than 3 weeks. Our volume is booming on this platform. It's incredible. And if you can't make a buy in 15 seconds on the app, we did something wrong. It's that easy, that intuitive. You can buy gold and silver in Canada or the US, and you're going to be able to buy it in London and Switzerland here in the next 2 to 3 months. We're working on that. So it's a beautiful product, and it allows you to do other things down the road that some of the physical products or ETFs just can't do. One we're working on that we're real excited about is imagine a credit card that pays your rewards in gold. Yep. Where literally you go in, you open your account, you just realize you earned $6 in gold that week, and it just adds up, adds up. We don't charge for the gold position, and we basically let you earn that in how you spend your credit card. So those things you can do in a digital world, I could never do physically. I could never do it with ETF. And you got the APMEX Sprott brand behind it, and it's doing amazing. We're already at about $100 million run rate, and the program's only been up 12 months.
And Ken, one quick question there. You touched on it a little bit, but I know it's something that's on people's mind. It's something I always think about. If you could get into a little bit of how people know the metal's there, as that's a question about GLD and SLV that I don't really know the answer to, but.
Absolutely. So in the case of the Royal Canadian Mint, they attest to it. I can't sell metal they don't say is there at all times. In the case of the U.S. location, we actually have an independent firm, a top 5 accounting firm actually, that comes in and audits it to our books. They do that twice a year. And of course, we're willing to provide attestations of the inventory. I've got insurance at Lloyd's of London. And I would say finally, I'd wrap it up is, look, I've done $10–11 billion in revenue at APMEX. I'm not going to put my whole company at risk by not having metal there. That's ridiculous. And that's the thing I think is most important is it's a company you trust. And we're going to protect you at all times. I guarantee it. And our company stands behind it and has for years in taking care of customers. So some of these fly-by-night guys who come in and try to make a pitch and it's too good to be true. Well, it's too good to be true. They're not buying metal for you. And the thing I would tell people is you're getting institutional pricing because we're buying it in bulk and we're actually doing pooled metal. So it allows me to buy the metal. I pay 2 cents for the silver. I charge 6. Okay, it's very thin margins. And then I charge a very minor storage fee, 12 basis points on gold, 30 on silver, or $5 minimum a quarter. It's very cheap to hold the metal. But I agree with you. Metal has to be there. We're working on how to share bar numbers and other things to also give additional evidence that the bars are there. But consumers hopefully can trust that our brand would never do this if we wouldn't go down and take position of the metal.
Well, I appreciate that, Ken. I think the people listening appreciate it too, because it's one of the more important factors. And perhaps just how do people find you if they have questions or actually want to place an order?
Yeah, I mean, obviously, I'm on LinkedIn. I've seen many people come to me on LinkedIn. I got to get me a Twitter account, I've been told. But you can send an email to me, kenneth.lewis@apmex.com. Look, one thing we're prideful of is we take care of the customer. You have any questions, physical, digital, you want to know how it works, you want to ask questions about title, you want to get copies of insurance policies, you want to ask questions and be comfortable, you're going to get your phone answered and you're going to get taken care of. And that's something we've always done for 20 years. 4.8 rating on a digital platform on 1,500 ratings for OneGold, 4.9 rating on over 100,000 pieces of feedback for APMEX. We're known for service. We take care of the customer.
Well, Ken, I sure appreciate that. Appreciate folks like you making this easy for people because, again, CNBC and Wall Street doesn't quite dig into it as much, but good to know there are good options out there. And thanks for joining me today and shedding some light on this.
Hey, man, thanks for your time.
So that is today's episode. I do thank you for spending some time with me and hope you enjoyed it. If so, go ahead and hit that subscribe button, and I'll see you again soon.